Hi, Gary LaPierre, and you are watching Stoughton Media Access Television.
Hello and welcome to another edition of Community Forum. My name is Joseph Feaster. I am the host of the program, and I welcome you to another time for us to get together so we can come together and share some information which I hope will be beneficial to you. Today I want to talk about financial matters. We oftentimes hear about not taking care of our estates, not taking care of our life insurance, annuities, different type of products. And the guest that I have today is a person who will be able to provide some insights and some assistance. He's a Stoughton resident, a dear friend of mine, and also my financial advisor. And I would like to introduce you to Andrew Ward, who is the founder of the Ward Financial Services, LLC. Mr. Ward, Andrew, welcome
Thank you
to
for having
Community
me.
Forum.
Thank you.
I know you so well, so I want our viewing audience to get a sense of who you are, and I'll start by beginning. We've been longtime friends. You've been my advisor for quite a number of years, but you're a deacon in a church. Family of 5 children.
Correct.
Stoughton resident. So that's my segue to pass it to you to tell a little bit about you as schooling and education and how you got into the business of financial services.
Sure. I actually had interned for a financial planning organization, a large, actually international firm when I was in college. I attended Bentley University in Waltham. I was a finance major, so they did give us some exposure to this industry, through classes and as I referenced, the internship program, et cetera. And when I graduated school, I decided to get in the industry, not on the client advising side, but more of an internal capacity. So I did that for a number of years before deciding to get into the industry and the client advising side. And I've been on that side of the business since 2007, early 2007. And I built my business basically on word of mouth. So, most of my business, I'd say about 95% of it now comes via referral. That's the business aspect of what I do. From a personal perspective, I have the 5 children, as you referenced. My wife, Courtney, and I make our home here in Stoughton. I am a deacon at Jubilee Christian Church, where we have 2 locations, one in Stoughton on Route 27 and one in Boston. And I'm very actively involved in the church as well. I do serve in a capacity there in addition to my work in the financial planning industry.
Let's parse some of so that our viewing audience will fully understand. You mentioned that you started out doing internal and then went to client services. Mm-hmm. Can you tell us what the distinction is on that? Sure.
There's many folks that support advisors like myself, whether it is in the administrative capacity or helping advisors with illustrations for clients or creating financial plans. And I more served in that capacity prior to, again, going on the client servicing side, which is more front-facing, the relationship-building aspect of the business. The financial services business is pretty broad in scope, and the way I describe the work that we do is really more planning-oriented than product-oriented. So, some of the things that we'll use as an example is you have investment management side of the business, which Merrill Lynch or a Morgan Stanley or a UBS or what have you will focus their efforts on, and it's really client asset acquisition. On the other end of the spectrum, you have a New York Life or a Northwestern Mutual who really focuses on the insurance planning side of the business. I think where I've built my practice and where my firm excels is really sitting in the middle and creating a plan and a roadmap that may ultimately use those products and services, but ultimately creates the plan first.
Let's talk about, again, you can use me as an example if you like, but I want to have the viewing audience understand why they would need your services if they were so inclined. That's why I'm having you on, because I think that you're excellent at what you do. But even the whole thing about a financial planner, you know, you hear about financial planners, you hear things about licensing, no licensing. Can you walk one through that from a first meeting, as they're thinking through what they should be thinking about as far as their financial services, financial needs, future planning, and the types of products? When would they, or when should they get in contact with Andrew Ward?
Sure. I have clients that are a variety of age ranges, a variety of occupations. I would say a majority of my clients are married and or have children, whether they're young children or they're grown. I would say the need for my services really come into play when you're making a number of financial decisions over the course of your life, and you really want to know if you're on track or not. So most of my clients, whether it's folks like yourself or other individuals like myself that may be in a different stage of life, it's I have a retirement plan at work. I have some money that I left at an old company that I used to work with. I've got a bank account. My wife's got some accounts. We've got a 529 account for the kids. We have some life insurance. What is all this? And how is it working well together or working against each other? And that's when I say, it's time for a plan. Those are really the people that I work with and can help the most.
Well, some people think that, I can just buy some insurance here, buy some annuities here. I have my 401k at my job. I'm not interested in doing these types of things. And at the end of the day, when I want to retire, I'm going to be well taken care of or have already planned. Is that a true statement? How would you dissect that and educate one on what they should do?
That to me is a very, very dangerous way to look at your financial situation. And the reason being is you don't really have a professional giving you professional advice, someone who lives and breathes this every day. So I often there's two examples you could give is, chemicals on a shelf, in your garage. So you may have oil, gas, and a number of different things. Do you know if that stuff were to coexist with each other and create an explosion? You never know. And the same way we look at the financial instruments and tools that you may have purchased or acquired or are investing in over time. You don't know if those things are working well together or against each other. The other example would be, a simple checkup from a doctor. If I go to my primary care and the doctor says you need knee surgery, do I go and just say, okay, ready to go get the knee surgery, or do I get a second opinion? Or do I try to self-diagnose? So we don't self-diagnose in the medical field. We don't, just have chemicals on a shelf without an understanding how they interact with each other. I think we should take that same approach with one of the most important things that we have in our lives, which is our financial accumulation or our legacy planning for our families.
Let's do it by illustration, because I think that we can talk about what one should or should not do. I think most people learn better by seeing or hearing a demonstration. So let's do a role play.
Sure.
And let's do that to be able to say, okay, you now have, I'm Mr. X, Mr. Feast, or however you want to describe it. I'm going to relate to you some of the, and I presume you have a questionnaire or whatever you go through. So here you are, I've invited, I think that I need financial planning services. Let's walk us through how you would start the conversation.
Sure. So typically, as I referenced earlier, you're going to be referred in by an existing client or someone that I have a personal relationship with. And so prior to that meeting, what I'll do is I'll have my staff send a checklist of documents that we'll need for that meeting. Now, some of the things may be relevant, some may not.
Okay, what would be, let's walk it through. So what would that checklist consist of?
Any type of investment or retirement accounts, any life insurance policies, disability insurance policies, long-term care policies, any annuities, any pay statements for yourself and or your spouse, and your mortgage, expenses, income, anything relevant that you feel that you made financial decisions around that should be a part of the conversation.
Okay.
So you bring this stuff to the meeting. You and I are really going to have, you and Phyllis, we're really going to have a dialogue around what your goals are, personally, professionally, and financially, because all three are intertwined. So we're really going to just have a free-flowing discussion, not necessarily about rates of return or where your assets are held, but where do you guys want to go? What's important to you?
So the conversation could go something such as, I want to make sure that when I leave this earth, that I provided for her, provided for my daughter, provided for my grandson, wanted to make sure she had no mortgage, And that's if I pass on. If I am living, I don't want much risk. I want, and I want to have a modest income throughout our life so that we can continue to enjoy the lifestyle that we've enjoyed up to this point. So that would be the type of conversation.
And so as you're giving that feedback to me in a sense of what you want to see and how you want to see your life progress from a financial or a personal perspective, I may say something like, well, Joe, that's all good and well, but do you recognize that these investment accounts you gave me are heavily allocated to this particular sector in the market? And if that's the case, you're taking a lot of undue investment risk on. And you may say, whoa, I didn't even know, I wasn't really paying attention to that. Or I may say, Joe, are you aware that your life insurance policy expires in 5 years? And you may say, whoa, I just totally forgot. I bought this thing and it was kind of set it and forget it. And I haven't really paid much attention to it, since then. Or maybe, hey, your beneficiary designations are not in line with what you just articulated. In fact, the way things are structured now, everything goes to your grandson. And so that's the type of dialogue and discussion that we'll have. And because we're all busy, managing our professional lives and our families, a lot of the financial stuff is not necessarily buttoned up and taken care of. And that's the job of myself and my team to make sure that.
Now, I was one who was always a planner, and I'll use my personal example. So therefore, I remember around 20-something, I bought Universal Life, which was a product that existed, I think, I'm not sure if it still exists.
Still does, yeah.
And then said, let me get some, I'm going to gamble. I'm going to get some term life insurance because it's cheap. You can get a lot, but it is term.
Yep.
And so that was it. Now, as you advance on and you come to the end of the term, what are the types of conversations would you then have? I know you just talked about the products, and let's say one has the annuities, they have it. I guess I'll start to say, how do you go through the analysis to determine what type of products are best suited for the person who's in front of you?
Great question. I mean, it's really based on their goals, combining with the fact their risk tolerance, their age and where they're at, and where they want to go. So as we collect all that data and then we have the conversation about where they want to go, my team takes all the information, puts it in a web-based software which creates the financial plan. Out of that financial plan, I'm going to diagnose which products may make sense for that particular person and or couple. And so what we'll do is we'll go down one to three options. It's not just a one-shot deal like here it is. It's, Joe, here's the pluses and minuses of this option versus that option versus the third option. And ultimately the client decides. And then we talk about, okay, here's how we're going to implement those strategies.
Now, some people I'm sure listening to this said, I don't need a financial planner. I get these circulars that come around to me all the time talking about Globe for the baby and all of those, and I've been caught up in that. I never purchased, but at least I've read and I've inquired as to whether this is a product I should use because, as I said, I'm thinking about long term for my grandson and all of those types of things. It appears to be cheap, and you decide to do it. In the evaluation of those types of things, and I know you talked about it with the plan, but I almost want to try and see if I can really give folks a one-on-one on financial planning here and get them to thinking about what they need, because also as a lawyer, I think about estate planning, which is a whole nother conversation.
Correct.
Not this program, but we may talk a little bit about it. But more importantly, this aspect's because of my conversation with you, and I've had prior financial advisors as well, is so critical, and particularly at a point in time. So if you had age and or circumstance examples that you would use, let's use it. If you can break it down, say for instance, in their 20s or 30s, maybe this is what one should be thinking about. As they approach here, have family. So give the examples that will walk one through it, because I want the viewing audience, one, to get a sense that they need to look at this, and two, that they need to call you. So let's see if you could give some examples there, because we have viewers of all ages who are maybe watching.
I'll address 2 points. One is in terms of getting inundated with circulars and magazines and radio and all this other stuff where we hear financial tools and products and advice given in a broad scope, that you have to be careful of. as I'm sitting here today, I have to be somewhat broad in what I'm discussing.
Absolutely.
But you really want to drive home an individual discussion with a qualified professional. Usually that's going to be someone that's referred, and that's going to be someone you know, like, and trust. But I really, really caution people from taking these broad-based assessments of the industry and/or advisement from these broad communications, because they are just that broad.
Or the phone call.
Or the phone call. Because these things are being mass marketed. So it's marketed to you and your goals and concerns. It's marketed to me, my goals and concerns, but it's also marketed to someone in Mississippi and their goals and concerns. So when you pick up a magazine, or you see on TV, or you hear on the radio, or you're getting these things in the mail, you have to be careful, just simply because it's not specific and unique to your specific situation. So that's one. Two, I would say there's probably 3 phases of life that we look at. The initial stages are you're in that protection and growth stage. You want to make sure you protect your income utilizing insurance vehicles, but you also want to keep an eye on the future and make sure that you're allocating resources to your goals. So whether that's educating your children or saving for retirement or a major goal or a purchase, maybe it's a house. So you're in that protection and growth stage. Usually those folks are in the 20, 30, 40 age range. As you get to that middle stage, your goals and priorities may be shifting. So it may be, hey, we want to buy a vacation home. How do we do that? Hey, we're getting closer to retirement. Are our assets in vehicles that are tax efficient to us as we go to look towards retirement? And that may or may not be the case. So you're kind of looking at that type of setup as you move into, say, your 60s, who are, hey, we want to pass these assets and the things that we've accumulated on to the next generation in an estate tax efficient manner. How do we do that? We want to make sure that we're not taking on undue risk, because we have to create guaranteed streams of income, and that's where annuities and similar products come into play. So it's really keeping an eye on making sure that you have liquidity, tax efficient vehicles, you're not taking on a lot of risk, and that you're protecting your family and yourself over the course of that journey.
I know in our conversations as well, and thank you for that. I think that was a great explanation for anyone that's watching, who will be in any other age group or their family members, to say, pick up the phone, and in order to do that. In fact, I'm going to do a public service announcement right now, because I like them to bring up your business information, how they can contact you, so that they would have that information. And I want to do that periodically throughout the program. So if we could bring up the slide which shows the business, we show here that Ward Financial Services, LLC, 30 Braintree Hill Office Park, Suite 203, Braintree, Mass. 02184. And you can reach Mr. Ward at 781-722-0115, extension 1003. And I'm doing that, and when we talked about this program, we really felt that it was so important. And I'm finding it, I do on occasions. I'm a conservator for some estates. I'm the personal representative for some estates, and I've just find that in that regard, people have done almost zero planning. And I know when we've chatted, you work along, because you don't do the estate planning side, but what you do is work along with estate planners. What is the correlation or the nexus that you're trying to establish with that aspect of the services side or the planning side? Because you, as you stated, you do the planning and then you apply the products to achieve the plan that one wants. And then also you want to say, okay, let's make sure that as you go into the hereafter, that you can carry out these responsibilities. So what's the correlation between what you do and the estate planners that you work with?
Sure. I think the two go hand in hand. I think a lot of times that, again, just as we make these isolated decisions, that we're not taking care of both sides of the equation. So, my push is to say, look, you, for the most part, only have one chance to get the estate plan correct. Because once you're done, you're done. You can't go back and recreate it. So I think that the estate planning piece is probably more important than the financial, believe it or not. And that really just takes crafting your documents and executing your documents and making sure it's done. Once it's done, it's really in service mode, and you make sure that you update with law changes, things of that nature, but you have to address that piece first.
I want to give an example. I know this wasn't to be an estate planning program, but I don't think you can have the conversation without at least pointing to some of the issues that come in estate planning. So let me just give some illustrations that at least that I've seen in my practice. Person most people at best will have some form of life insurance. They may not have made the specific designation, which is problematic in the sense of, because then the funds go into the estate, or they've made it and have not updated it and the changes. So that sometimes is the issue. We have ways in which, one may get sick and have not done the things appropriate to protect their real estate assets and other assets from liens if they need any type of state or federal funded health insurance, health payments, and so therefore those become liens and attachments on their property, which can be addressed through an estate plan or life estates and things of that nature. So what I find is that many times folks are sitting on their house rich, but they haven't done the type of planning which will ensure that what they were desirous of doing, of passing that on to their heirs, is frustrated because a lien comes in because they had to get medical treatment. They don't have long-term insurance, and so therefore those assets, that house, becomes the method for payment or repayment of the monies which the state or federal government may have given. I presume that you've had those types of conversations with some of your clients as well.
Of course.
Elaborate a bit on that.
Yeah, I mean, I can give you, just a real live example of my wife and I, and our planning for ourselves is I own $7 million personally of insurance on myself and another $2 million on my wife. So if we hadn't done our estate planning and God forbid something happened to both of us at the same time, maybe we're flying to a vacation in the Dominican or what have you, and we didn't update our trusts or anything, $9 million would be left to our children. Now that'd be a state tax exposure both at the federal and the state level, and our children would have whatever the net differential is left over to deal with for themselves. So without the lack of a proper estate plan, you're leaving all these dollars that you worked hard for and planned for to young children that may not be suitable to make prudent financial decisions at their given ages.
So so we've talked about several things. We've talked about the plan, and that's developing a now plan and a future plan. That's the financial planning, and is based upon taking the individual's desires, using your professional know-how to offer to them all different types of ways in which they can accomplish their goals. And that could be annuities, that could be insurance, that could be long-term care, long-term care insurance, that could be a number of different things. Excuse me, a will, an estate plan, addressing the property in many different forms. It could be a trust, it could be a life estate, but it's looking at all of that. Now, the other part of that is, okay, now we have gone through, let's talk about specifically, there's some people, we may be using terminology which is meaningless to them. I'm sure most of the viewing audience have heard of life insurance. Let's walk through the types. Let's talk about, because I think we have to talk about products, because even though you're not based on product, you're applying products after you've done the planning. So let's talk about the different types of life insurance and have an explanation. Let's talk about annuities. Your sense, I mean, I don't know if there is a general rule of thumb as to when one or the other would apply. Let's talk about how long-term care becomes involved with it. And I also know you have some products which basically combine several different aspects of it as well. Let's go into the product issue so people understand what exists in the marketplace.
Sure. I mean, you touched on, from a life insurance perspective, term insurance. So term insurance is probably the most common life insurance product out there in the marketplace today. Reason being is it's cheap. So term insurance, when we use the word cheap, term insurance is you can get a lot of death benefit or insurance benefit for a little money. So for instance, someone in my age range that's relatively healthy, $2 million of coverage may cost them under $1,000 a year or under $100 a month. So, the reason it's so cheap is because no one dies within that term. So for instance, in that example, if we're talking about a 20-year term insurance policy, the way it works is I'm 36 now, that coverage will remain in force for 20 years. So when I turn 56, coming into 57, the insurance company shakes my hand and says, Andrew, thank you for all your faithful years of paying premiums. Your insurance policy is now done.
Now, you can get some which will allow you to convert
Correct.
to whole life.
Correct. So
Okay.
with term insurance, most term insurance carriers or issuers will allow you to convert to some sort of a permanent policy. And we'll talk about that in a second. But that's how term insurance works. And that's why it's the most popular, because it's so cheap. So someone could say, I can insure myself for $2 million, again, for under $100 a month, or whatever the numbers are based on age and health.
Now, I find so many people who don't even have that.
That to me is just a no-brainer decision. Gym memberships nowadays are $70 to $100 a month. I mean, you got to put it in that perspective. You got to protect your family. I mean, it's just a low-cost way to make sure that you have the coverage in place. And there's all sorts of calculators and things that we discuss in terms of how much you should own, et cetera, and we discuss those on an individual basis. The other products that are available out there in the marketplaces, there's probably three main types that have some sort of cash accumulation or a living benefit accumulation. So you're going to pay more for those because you're really getting a product that has two features and benefits as opposed to one. And they also have a death benefit that's going to be in force when you die. So there's a guarantee associated with that. So rather than having that one-shot deal where you pay a premium and if you don't die, there's no value to you while you're alive, these permanent products have a value that you can access over your lifetime in a tax-efficient manner. Those products, again, you have to work in the funding of those products within your budget because they are more costly, but they do provide more value and more benefit, not only where you're alive, but again, they're going to pay a benefit when you die. So there's no call from the insurance company that says, hey, it's year 21, your policy's over. That policy goes in forever.
Now, let's be descriptive in names like there's things
Sure.
called whole life.
Yep.
I mentioned the universal life.
Yep.
There are products that have riders for children up to a
Correct.
certain age. And so,
Correct.
I mean, I want us to be able to tell folks
Sure.
what the types of, because as they're sitting out there looking at their own personal situation
Sure.
or family situation, they may say, oh, wow, they may not even have had this type of conversation. I want them to know what's available.
Sure.
So let's go into as great a detail as we can.
Sure. So on the permanent side of the house, you have universal life, which you referenced. Universal life really is not designed to utilize it as a cash accumulation vehicle. It's really to provide a permanent death benefit for life. So it's a low-cost way to have a death benefit for when you're gone, or lower-cost way. We really don't use those as accumulation vehicles. We really use those for folks who say, look, I don't want to use my insurance policy as a way to accumulate value for me. I just want to make sure that it's there when I'm gone. So those policies can go out to age 121, believe it or not. There's variable universal life, which takes a universal life type of a chassis and adds a mutual fund component to it. So folks may say, I want to use this as an investment vehicle. I also want to make sure that, again, that it provides a benefit for when I'm gone. Now, the uniqueness of that product is if you're bringing in mutual funds or the market into the equation, is there's no guarantees with what the market will do. So you have to be careful in implementing that product or strategy into your financial plan. And then there's whole life, which is one of the oldest financial instruments in the world, in the industry. You pay a premium, you have a cash value accumulation that accumulates in the form of dividends and guarantees. Dividends is just return of excess profit of whatever insurance company you decide to use. And then the insurance is for your whole life. So that product is around, when you're gone, that it's guaranteed to pay a death benefit. So that product is pretty powerful when used in the right situations, and people fully understand the power of it over the long haul. Because in the short term, the term insurance makes a ton of sense because it's cheap.
Yes.
But in the long haul, it really ends up costing you more.
Now, annuities came into the market later in the game, because you talked about whole life. That's been there since the beginning of time. They probably had it back there around Mesopotamia. They probably had somebody
Walking door to door.
There had to be somebody selling someone insurance. Listen, watch out for that pyramid. You got to go work on that pyramid. I better get you a little bit of insurance. But annuities, and again, because I've had conversations with you and colleagues like you in the business, I know that's a more or less, a 60s or 70s or 80s. I mean, somewhere in that time frame, they created annuity. What is an annuity?
So there's two different types of annuities. Really what insurance companies did is they got smart because over the last, however many decades, companies are not providing pension plans anymore. So really we have to take the ownership on our savings goals for retirement. Let's just look at retirement. And so what insurance companies is they designed annuities, which will give you, you give them a lump sum amount of money, they'll give you a fixed stream of income payments over, a period of time that you decide to select. Oftentimes we'll do lifetime payments, and it's guaranteed no matter what happens in the market. So really what the insurance company is doing is providing a benefit back to you that's guaranteed. So that helps for clients that are either nearing retirement or in retirement, count on a consistent stream of income. And it works just like a pension would. And like I said, as pensions have become few and far between with what companies are offering their employees, annuities are a good way to create a guaranteed stream of income.
Now, let's talk about, because we've heard, in fact, if you will, the person who was doing the advertisements for the long-term care just recently passed. The former, I believe he was a senator, and he was also an actor on one of the programs.
Law and Order or something like that.
Just recently passed, but he was one of the, if you will, spokespersons for the long-term care. We're hearing so much about it. The government has stepped in and tried to be in the marketplace by saying, long-term care, and we guarantee. That's what you hear some of the ads. What is long-term care insurance? Sure. And secondly, how does that fit into the as you said, the plan and the conversation with a prospective client?
Sure. Long-term care is a product that basically insures your assets. So what you buy long-term care, you pay a premium for long-term care, and you basically have a pool of money to access should you become, should you not be able to perform 5 activities of daily living. That's the way the insurance company views it. And that's bathing, transferring, getting in and out of bed, eating, and things of that nature. So really think like, home care and or, nursing home care. So if you can't perform 2 of the 5 activities of daily living, that gives you an access to the pool of money, or to submit a claim to access that pool of money. So really what your premiums do is they go towards paying for an access of pool of money, so you don't have to use your home, retirement assets, cash savings, etc.
And again, as I pointed out, I believe that there is, at least in the Commonwealth of Massachusetts, there is a state component or some type of state protection.
There's partnership programs that are out
they
there.
have.
Yep, correct.
Well, what I want to do, there are some public service announcements, which what we do here on Community Forum. I want to take care of those. And then I want to come back and explore a little bit more. There may be some areas that I didn't really touch on that you feel that we need to educate folks on. I want to make sure that they know more about you and the services that you provide. So why don't we go to the public service announcements, and we'll be right back.
Hi, it's Gary LaPierre, and the crew wants to thank Maxie's Delicatessen. That's at 117 Sharon Street in Stoughton. They're 781-341-1662. American Cancer Society, yes, they're looking for volunteers. Drive cancer patients to and from their treatments. 1-800-ACS-6662, or just go to www.cancer.org. Ilsa Mark's Food Pantry in St. Anthony's Free Market, 2 Park Avenue in Stoughton. For more information, call Christine Gallagher. That's at 781-341-0611 or 781-341-0549. Meals on Wheels. Just ask for Jessica. You'll find her at 781-344-8882, extension 2. Stoughton Penny Saver. Our business is advertising your business, they tell us. 27 Rose Glen Street, Stoughton, 781-344-4833. Community Forum showtimes in Stoughton. It's Thursday, Friday, Saturday, and Sunday at 6 p.m., Monday at 8 p.m., Tuesday at 5 p.m. It's on Comcast Channel 9 and Verizon Channel 28. All comments and suggestions welcome. Contact us at communityforum1@yahoo.com. Community Forum showtimes in Easton. Mondays at 9 p.m., Tuesday at 8 a.m., Wednesdays 3 p.m., Saturday 10 a.m. And that too, Comcast Channel 9, Verizon Channel 22. Samaritans, they're at 41 West Street on the 4th floor in Boston, 02111. Their phone number is 617-536-2460. 24-hour helplines for Samaritans, and the number is 877-870-HOPE. That's 877-870-4660. 888-252-8373. Samaritans, you can find them at 800-252-TEEN. That's 252-8336. Or find them online at SamaritansHope.org.
Bigo returns at the Avad Torah Congregation, 1179 Central Street, Stoughton. It's going to begin now in January of 2016, so stay tuned. As those dates become available, you'll be able to see it first and hear it first here on Community Forum. My guest today is the founder of Ward Financial Services, LLC. That's Angela Ward. They're located at 30 Braintree Hill Office Park, Suite 203, Braintree, Mass. By phone, you can reach Andrew at 781-722-0115, extension 1003, or by email at award@financialguide.com. Well, Andrew, we're back, and I'm glad that we transitioned using your contact information again, because I feel that that I've seen over my years of practice, and that people just do not think that this is important for them to do, the type of planning, or feel that they have it all under control. And I'm just finding that that's just not the case. Mm-hmm. And some may say, well, fine, he's directing me to Andrew Ward. No, folks, I'm not directing you to Andrew Ward. What I have is Andrew Ward, who provides financial services for me, advice and planning for me, is good. But more importantly, we wanted to talk to you about making sure you get your plans in order, both in terms of your financial planning as well as your estate planning. So if you're inclined to do so and you don't have someone out there, I'm saying to you, as Andrew said, oftentimes it's a referral. So I'm referring you to Andrew Ward if you want to get your financial services addressed appropriately. We were talking about long-term insurance, and that again is a conversation that really started, my recollection, within the past 10 to 20 years. It hasn't been a long-term, no pun intended, conversation, because I think even within the industry, different products develop as the need arises. As you said, one, whole life has been around since the beginning of time. Universal life became a product. I remember this was, for me, was in the 70s when this
70s and 80s.
Yeah, when the 70s when that product came up. I still was a student in school, but I always looked ahead in terms of the future. Annuities came in after that in terms of the products. So, and I guess the industry will develop products as the need arises, as things change, and they determine that they need different products. Now, again, oftentimes people will rely upon the fact that they have their 401k and say they own their private home. And they will say, what type of, and again, I may be belaboring a point, but I really want our viewing audience not only to understand this from the outset of the program, but I also want to leave them with the type of message that you would provide to them as to what they ought to consider doing. And I know we've said it, but the rule is you say it once and you say it again and you say it again and you say it again. What is the message that you would leave with it? Here is Andrew Ward doing his financial planned financial services presentation. What would you say to a group or audience of individuals as to what they ought to consider?
Sure. I mean, the big push for me is to just make sure that you have a second opinion, a coach. Tom Brady has Bill Belichick. Make sure that you find a qualified professional who can create a plan or a roadmap, not just pull products off the shelf, but to help you look and see what all that you've accumulated, and again, make sure it's working well together. And working well together is in different time increments. That means now the immediate or middle term of your life, and then as you come towards the end. So I think meeting with a qualified professional that can help you see the broad scope of your life and help you achieve your goals is something that's critical for people to do. So it's really taking ownership over the things that you've done and the things that you may look to do, and having a plan or a strategy to help you achieve those goals.
Is there any sense that you're either too young or too old in order to begin to do? Some people may be sitting there saying, wow, I wish I'd seen this community forum program back 10 years ago. Is there any time when it's too late in which to do it, or is there any time when it's too early to do this, this planning, this thinking about what you should do?
No, I don't think so. I think the biggest obstacle I see is most folks say, well, I don't have enough money to go and work with a financial planning or a financial services professional, and that's not the case. You just need to find a person that, again, comes more than likely referred. You meet with that person, and if it's someone you know, like, and trust, you understand how they get paid, and you understand what their services are and who they typically work with, and then you build a relationship from there, because that's what this business is about. It's more relationships than it is numbers. But I don't think anyone's too early to start. I mean, I have clients that are in their 70s, so it's never too late. It's really just identifying how that person can help you. And if you're working with someone like me, I may say, hey, you got it all together, nothing really I can do, or here's some small tweaks. If you're too young, here's a path that you want to get on, and so be it. And it may be something where I'm just giving some advice and feedback, and that's really all that I'm doing. But at the end of the day, I mean, I think to have a conversation with a credible professional is going to be more valuable than just sitting and doing nothing.
And I think that you have consistently used the term credibility or credible in terms of, and that gets into the words of trust with the person that you're with. And I have that type of trust in the relationship that you and I have, not only as friends, but as my financial planner. And I know recently, because periodically we'll sit down and you will review, because things change. You will review what I have, and like I said, I've been doing this for a bunch of years, but we've sat down and we've changed some products, we've moved some products around based upon the type of sage advice that you've given me. But even just recently, you came to me and said, well, if we do this, you'll be able to get more product, more of your, to rely, well, how would I best describe it? How you would be able to further implement your plan at really no additional cost to you. Now that was, hey, listen, that's like, as a kid, I can get more candy, I get more candy, but it doesn't cost me any more money. Listen, my ears perked up. And you devised a way in which I could accomplish that. And then the other issue I want you to, and you can use that, my situation, you have my permission to use my situation for purposes of illustration, but also there were some other things that we talked about which came into play, and I'm losing my train of thought on that, so we'll come back. Why don't we talk about the situation around how I could get the insurance?
Sure.
And also maximize my plan with no additional cost to me. And the other thought did come back to me. The one about people say, well, I can't afford it because I have to pay the financial planner. Tell them how one gets paid. And so that'll be helpful for them as well.
Sure. So as I gave the spectrum of the industry, you have the investment side of the business. More often than not, those advisors are paid on a fee basis as a percentage of assets. On the insurance side of the business, all the insurance-based products out there in the marketplace are commission-based anyway. So whether you go and buy it online or you buy it from an individual like myself, they're commission-based. Where I sit in the middle, there's often times where we will charge a financial planning fee. It just depends on the complexity of the situation. But also, if it's just some implementation, we will get compensated, whether it's on the investment management side, as I referenced, or on the insurance side of the equation. And insurance, I'd classify insurance and annuities together. So we do get compensated from the company that we decide to do business with.
Yeah, so it doesn't necessarily, you have to be sitting there with thousands of dollars to be able to pay the financial planner. It's use of this planning and products and all of those things from which one might derive their remuneration.
Correct, okay. And I think it's important that when you're meeting with that advisor, even when people will meet with me, I stress, ask me how I get compensated, and I'll tell you. If we're going to implement this, then this is the company that will compensate me and how. And if we're going to do that, then this is the company that we're deciding to choose, and I'll get compensated from that regard. But it's important to choose someone who's product or company agnostic, that doesn't really care which company you use, as long as it's the best for that individual client and that individual situation. Because ultimately, at the end of the day, your clients are who you work for, not for the insurance or investment company.
And now, the example of how you said you looked at my portfolio. I want to sound big time. So you looked at my portfolio and you said there are some ways in which we can accomplish some other things if you were to consider doing X.
Yep. So in your particular situation, there were some assets that we had exposed into the market and had some risk associated with it. And I know your goals to leave a legacy for your daughter, for your wife, and for your grandson. And I said, let's use some of those invested assets to create a stream of income that will help supplement purchasing a life insurance policy, which will ultimately achieve the goal that you've set out to achieve, which is to create, an estate for those individuals that are, your family members. So what we were able to do is just use the insurance company's money, the guarantees that they're willing to provide to us, to purchase an insurance policy, which will then provide an estate for your family. And the beauty of that is that you're leveraging what the insurance company is offering from a guaranteed perspective. And for you, it's money that you were looking to leave to them anyway. What we're able to do is increase the value and use that asset as leverage.
And that was so appealing to me. And now that was the expert plan. I'm gonna break it down for us, for us dummies standpoint, to be able to understand exactly, again, by example. Took money from A, which it was just sitting there. Mm-hmm. It was a value because it was increasing on the asset. It was out of a particular product, and we said, hey, you can take that money, and I basically increased it 10 times mm-hmm. by mm-hmm. a death benefit by purchasing insurance. Mm-hmm. That's effectively, folks. That's all I did. Mm-hmm. The same amount of money that would have been sitting there. Just sitting,
doing nothing.
It'd be
not
like
doing nothing.
Yeah, well, it would be.
It goes up, it goes down.
That's right, but it's sitting there like it's in a savings account. Mm-hmm. Just sitting there. It's guaranteed. Well, it's not guaranteed because it can go up and down. Mm-hmm. But now I'm saying, hey, I can take that same amount of money, no additional money out of my pocket, get an insurance policy, which then will achieve some of my other objectives. So, again, folks, what I'm saying is. And what we're talking about here is that there are opportunities for you to get your individual planning, which will allow you to have that type of flexibility, make those types of changes, and personalize it to what your particular situation is. You can't beat that, and basically at a low or no cost to you. Mm-hmm. Because if you're going to buy the products anyway, you're going to buy from somebody. That's right. Someone's going to get commissioned, mm-hmm. and so therefore you have a better chance of it. Do you think that I want to sit down there on my annuities and go through? I mean, they send me the booklets, I use them for recycling in terms of, so my poor trash pickup folks get those booklets that they send me. You think I'm going to sit down reading those thick booklets which tell me the performance of every one of the things? Or do I want to go online every day? Don't have that type of interest. So this way, I have you to be able to say to me, and you have done that, I have things in there which say they make automatic adjustments. Mm-hmm. Mm-hmm. They look at how it's performing and say, that stock that you bought here is not doing well. We're going to shift out of that. They do it automatically. I don't have to do anything. They do it periodically. These are the types of things, folks, that I'm saying that is available to you if you are with a professional who you can trust, has credibility, and knows what they're doing. Who has some experience. And understands your circumstances. Wanted to just, because we have, we have some minutes here, and I wanted to be able to, I don't want to oversaturate folks with this, and I certainly don't want to be in the form of browbeating you, viewing audience, that you must do this. But I am saying that, it's something that you need to consider doing. It really is something that needs to happen. I'm just going to shift for a minute because I want to talk a little bit about what I have seen in the estate planning. I want to emphasize that again, because once one has done this, if I can opine that you need to look at getting wills done. You need to look at getting healthcare proxies done. You need to look at getting durable power of attorneys done. You need to have a conversation as to whether if you have real estate, whether you should be considering life estates, property in trust. And the reason why I say that is because of two reasons. One is the cost of probate, and as a lawyer or in a law firm that does probate, if you don't want to do it, that's fine. We do handsomely using your money in order to make sure that your assets go to those loved ones for whom you left it, including you can even give it charitably. But more importantly, if you find so many people who in their later years have a serious illness and have to get medical attention, and in that case, there is, with estate planning and otherwise, there are ways in which you can protect your asset from that lien or that attachment for that type of care. So there are experts out there who can help you with this. And I guess the tenor of this program and the reason for this program is just to suggest to you, and I will, I'm going to use what my wife says, choose my words carefully. I'm going to suggest to you that you ought to avail yourself of a person like Andrew Ward, if not him, and also to speak with attorneys around estate planning. It is essential that you might do so. So, that's the preaching side of that, but I think it's so important for it. Is there anything that we, from the standpoint of what you do, that might be helpful that we can share with a viewing audience here? Some other things that they might consider as they do that? Is it, or if there are certain types of things that are considered for purposes of insurability or any of those natures? I know recently for this new product that you sent me for, the insurance company wants to make sure that I'm not too great an insurable risk.
Yeah.
And so they had the nurse come out and and wanted to poke me and get get blood and all. Are there any type of suggestions that you may give to one as to how the process is for applying? Because I guess if you're getting annuities or anything, you're going to have health. They're going to want to know
on the life insurance
what your because they're gambling that you're going to live forever.
Correct.
And you're gambling that in case you do pass away, that you can provide for your loved one. So, any conversation around that, Andrew?
Yeah, a couple important points I want to add to the estate planning front. Well, just one really important one is I'm not sure people are aware that the Massachusetts state estate tax triggers at $1 million. So if you think about owning a home and having some other retirement assets or whatever, once you trigger that $1 million, you're in the estate tax land for at least at the state level. And so when people hear that, I think that kind of propels them to start to act on some estate planning oriented work. So that's important. Two, on the insurance or the financial planning front, again, it's all part of a plan. It's all about creating a plan and having a strategy and taking some action. If anything, I just want people to take action, and to at least start the dialogue. And the dialogue, again, may go many different directions. It may be, hey, you have a lot of work to do, and maybe you have a little bit of work to do, and it may be, hey, stay on this course, retitle some assets, update some beneficiaries, and so on and so forth. It may not be a ton of heavy lifting. But really what I want to stress is take some action and have a meeting with someone. Again, as I use the example of coach versus player on the field. You may be an excellent player, but it's great to always have a good coach behind you.
Well, I know I have more minutes that are left, but I can't think of a better way with that summation that you've just given as a way to end a program. I can't thank you enough for willing to be on your willingness to appear here. What you provided can form a foundation, and what I would like to do is once again to pull up your information so that before we go, one will know exactly who you are and how they can reach you. I want you to take out for the young folks or those folks who are more mature, who act like they're young, they can put it on their phones. I'm going to give the phone number, Andrew Ward, 781-722-0115, extension 1003. Email award@financialguide.com. Ward Financial Services, LLC is located at 30 Braintree Hill Office Park, Suite 203, Braintree, Mass. 02184. If we can leave you, and I can't say it any better than what Andrew Ward said, if I can leave you with the idea, get your financial planning done, get your estate planning done, and I hope that you enjoyed the program. Have a blessed day.